Now, I want to move forward to some real economic news, or at least economic news that the markets perceived as being real, but it was really nothing but BS. And that was the release of the Federal Open Market Committee's minutes. And what sparked a big reaction in both the gold market and the dollar, meaning that gold surrendered its gains, so it sold off, and the dollar rallied, was the following sentence. And I'm reading from the minutes. Quote, a number of participants suggested that if the economy continued to make rapid progress toward the committee's goals, it might be appropriate at some point in upcoming meetings to begin discussing a plan for adjusting the pace of asset purchases. That's it. That's it. Now, the mere suggestion that there may be a discussion at some upcoming meeting of potentially possibly adjusting the asset purchases, that's it. Oh my God, they're going to taper. They're talking about tapering. They're thinking about talking about tapering, and gold sells off. It went from up like $15, I forget where it was, to down $7, $8. Ended up closing, maybe up $1 or so, but gold sold off. And we had this big rally in the dollar. We did see a bit of a sell-off in the bond market as well. Yields rose on the 10 and the 30-year U.S. Treasuries, all as a result of the way these minutes were perceived. But let's actually take a look at what was in these minutes. I'm going to go over what I just read again more slowly and comment on everything that the minutes reveal. So first, it starts off by revealing a number of participants. Now, what number? I don't know. Was it 1? Was it 2? How many are in that number? They don't say. My guess is that it's a minority of the participants. So I think most of the participants did not want to suggest this. And I certainly believe that among the number who did make this suggestion, that Jerome Powell was not in that number. So if you don't have the chairman on board, it doesn't really matter if you have a couple of guys on the FOMC that made a suggestion. If the chairman is not on board, then nothing's going to happen, right? So an unknown number of participants suggested that if the economy continued to make rapid progress toward the committee's goals. Now, we know it's already not doing that because these minutes took place before the recent horrible jobs number that was a massive disappointment, and other economic data that has been collapsing, like sentiment numbers, consumer sentiment, home buyer sentiment. So we've seen a big change already in the economic data. So we're no longer making rapid progress. And so the whole thing is already a non-event. It's much ado about nothing because the willingness to discuss or think about tapering was contingent on the continuation of rapid progress towards the committee's goals when that progress has already stopped. So it already should be dismissed as meaningless. Now I'm going to keep on reading. Then it says it might be appropriate. So might be, not it will be appropriate. It might be. So it might not be. So they're saying even if the economy continues to make rapid progress, which it's not doing, then it might be appropriate, but it might not be appropriate. Now, when? At some point. It doesn't say at the next meeting. It says at some point in upcoming meetings. Which meeting? The next one? The one after that? The one next year? In 2 years? I mean, they don't even mention which meeting it may be appropriate to begin a discussion, right? Because then it says it might be appropriate at some point in an upcoming meeting to begin discussions. Begin, not even complete, just start a discussion. When are they going to finish it? How many more meetings are going to take place before they finish the discussion that began? Which, again, leads me to the next point, to begin discussing a plan for adjusting the pace of asset purchases, not implementing a plan. They're talking about at a future meeting, they're going to begin a discussion of a plan to adjust the pace of asset purchases. That doesn't mean they're actually going to adjust it or that they even have a plan. They're just going to discuss a plan. And of course, they can discuss a plan and decide not to adjust asset purchases, which is exactly what they would do if they ever discuss this topic. But there's actually no indication from these meetings that they plan on doing it. They just threw the words in there. This is all part of the show, but eventually it's going to be like the boy who cried wolf, because there's going to be only so many times where they can bark about the potential of discussing a plan for tapering without actually doing it. Because again, I have described this situation, this box that the Fed is in, on multiple occasions on this podcast. The Fed can't taper. They can't raise interest rates. They can't turn off the monetary spigots. But they also can't admit that. Now, I admit myself that I thought the Fed was in the same box years ago when they kept teasing about raising interest rates and normalizing policy. I thought at that time that they were bluffing because I knew they could never finish the normalization process if they started it. And I thought that that was a big risk, that if they tried to normalize rates and failed, that might be a bigger problem than never trying at all. I think what happened that enabled the Fed to do that was the election of Donald Trump. That gave them the cover, and all that optimism about the Trump boom, and the fact that I don't think they mind pulling the rug out from under the economy when Trump was president. So I think, okay, that gave them the ability to do what I knew was impossible. And then ultimately, the Fed did exactly what I said they were going to do. They aborted the attempt to normalize rates and shrink the balance sheet back to zero. And now the balance sheet is at new record highs. But at this point, the bubble is so much bigger now than it was back then that there is no way, and especially with Joe Biden as the president, there is no way they're going to pull the rug out from under the economy now. So the Fed can't tighten policy. In fact, it has to ease policy even further. They're not printing enough. The QE isn't big enough. They need a bigger QE boat, and that's what's coming. But the Fed also can't admit that, because that would also cause a crisis. If the Fed admitted what should be obvious, and what I'm pointing out right now on my podcast, if the Fed admitted that, hey, we can't raise rates, why are you guys actually worried about taper or about rate hikes? We can't do it. The economy has so much debt that we can't raise rates, and we can't do anything about inflation. Doesn't matter how high inflation gets, we're not going to do anything to fight it. They can't say that, because if they say that, the dollar is going to crash right now. So the only way to prevent the dollar from crashing is to pretend that they're going to do the impossible. The crazy thing is how many people believe the Fed can do the impossible. But as I said in my last podcast, looking at the action in the dollar, looking at the action in gold, I think people are starting to discover or realize that it is impossible, and because it's impossible, the Fed won't do it. That's why gold didn't get slammed today. It lost a rally, but it came back and closed flat. Yes, the dollar index was up, but barely above the 90 level. So we didn't get a huge rally in the dollar. We didn't get a huge drop in gold. We got knee-jerk reactions because most of the traders don't get it, but some of them are starting to get it. So this is the beginning of the process where people start to realize the truth. And again, as the Fed continues to cry wolf about its intentions or ability to taper, but it never does it. And of course, we're going to continue to get more and more weak economic data. And that weak economic data is going to make it that much more obvious that the Fed is not going to tighten policy as the economy is weakening, because that will simply weaken the economy even further. And they are in the job of stimulating the economy, not sedating it. At least that's what they believe. I know that their stimulus is actually a sedative, but they don't know that. And of course, they've got no alternative, because to do the right thing would be so painful that all they can do is continue to kick the can down the road. I mean, if they were going to do the right thing, they should have done it a decade or two ago.